Hello and welcome to FX Addicts Weekly Currency Update. This is Tim, the Currency Professor, and today is Friday, November 30th, the last day of November for 2012. Today, a little bit of action, but not really a whole lot meaningful, especially for the last day of the month. Euro right now against the US dollar, just about 130 even, up about 20 pips on the day. And third day up in a row, although very minorly up over those 3 days. We are hitting up at some resistance levels, so it's kind of a deciding point here. Monday's session, in order for us to go higher, we would need to open higher and rally quite a bit on Monday, at least 100 pips. Right now, the way it's looking is we've had a nice run up. We're hitting this resistance level here. Stochastics made a high here, and prices made a high. Now we're making new highs, but stochastics are not. So if we turn around on Monday and we close below today's lows, that would signal a selling opportunity here. So we're looking at it very carefully and just kind of sitting back and waiting to see what exactly happens. Now if we look at the weeklies, this is the third week up, and we also started the week out quite negatively and have recovered at the end of the week, so that's a positive sign. However, this is still part of a correction here to the downside in this larger little upward movement that we're having. However, in the whole scope of things, it's still fairly down on the longer term, and if we look at the monthlies, we can see that here, how we're well within, we're still in this channel more or less. We're just slightly above it at this point, as we're going to close out the month just slightly above it, which is really not enough to signal a turnaround here. And this is also the fourth month up in a row, which it really is not positive at all, because it's just a few too many times in the last 2 months, last month and this month now, are very small ranges. So pretty indicative of a turnaround coming at some point here. We can see stochastics starting to diverge, so there's a very, very good possibility that we can fall off from here. This next month, December, we would have to rally considerably, at least 350, 400 pips and close up there before we can say that yes, this market has indeed turned around. But for right now, it does not look like that's going to happen. British pound against the US dollar, down about 19 pips today, and I've drawn in a couple of channel lines here so we can see, but we're within this channel. It is a negative day. We opened higher, we're closing lower. Not really a great kind of a scenario. Additionally, if we go out to the weeklies here, we can see last week was an extremely strong week, and now this week is turned into almost a doji here. We got almost kind of a turnaround signaling here, and stochastics have met up, so now next week we could sell off again. And on the longer scope, monthlies, well, this damage back here, and then we have this nice little triangle thing starting here, or starting, almost ending, which we should sell out of to the downside on this. So last month's and this month's very small range, quite indicative of a market that's getting beaten up here and is about to make a decision. So if we do rally from here, we would need to rally quickly and strongly up to about 167. If we cannot rally and get above these most recent highs, which we got kind of a little double top there at about 162.85, so if we cannot close above that next month, December, then it probably, and just not close above it, but decisively above it, we're going to turn around and go out to the downside here. And that's more than likely the scenario, is to continue this long sell-off back here as we come to a point and get down to about 125, 130 ultimately. US dollar against the Swiss franc, pretty much unchanged on the day, depending on your quote service, either up a pip or two or down. and we're just hanging around the 92.50 area. So on the lower end of the range where we've been the last few months. We've talked about this quite a bit, that we'll probably stay in this range, and the way it looks if we go to the weeklies, looks like we'll stay in this range till about the end of December, and we can draw that conclusion by this consolidation back here, the time it took back there, and we'll give it the same amount of time here, which would run us into the end of December. So about another 4 weeks worth of this in this range, and then probably a breakout. And we can see that here a little clearer on the monthlies as we came in here, we came off of this spike, pulled back just slightly, then rallied up again, made new highs, and now we've pulled back and we're consolidating again in this little area here. So the next move, probably January, will be a rally up, and a rally up above this. I've drawn into 2 trend lines here to kind of showcase what could happen. And this first line is based off of the last 10 years here that we would need to close above, which is now about 99, between 99 and 100. So we would need to close decisively above that for the month of January, which would put us up around 103. Now this longer line goes all the way back into the 70s, the 1970s. So very, very long-term type of situation. That is about 105. So we would need to close longer term 108, 109 there, and that would really signal an extreme turnaround very much longer term. Now that is a very, very good possibility because of this spike low. This spike low has a lot of significance. So it's a longer term play, but once we get above that, the dollar will rally considerably from a technical standpoint. U.S. dollar against the Japanese yen, very nice day today, up about 34 pips right now. We were up about 50 earlier, so we've backed off from the highs, which is not necessarily encouraging, but it's not bad either. Technically, we're doing very well here. We rallied up, we fell back, consolidated, now we're rallying up again. Really looks good here on the dailies. We got stochastics that have backed off, and now they're starting to pop up again. On the weeklies, looks very good. This is now the 3rd week in a row. We had kind of a consolidation this week, which really does bode well for a longer term upswing, and really looking for it to rally up probably next week to the highs up here, which is about 85. Just under 85, 84 even. So we get up there next week, very positive sign again. And on the monthlies, well, we're going to close out the month fairly strongly, and next month really looking for it to close out above 85. Longer term here on the monthlies with the US dollar against the Japanese yen looks very strong. Longer term, really, we broke out back here. And since then we've come down. Now we've tested this bottoming formation, this range. Here we are now at just above 82, 82 and a half, which is the same range we were in back here almost 2 years, or a little over 2 years ago. So we're building quite the base here. We've got a breakout. Looks very, very good longer term. So once we get up and we close up above these highs, which is around 84.50, 85 area, then we're really open road here to go considerably higher longer term, and really could see us rallying up well above 100, probably even to 122, 125 even. So longer term looks very, very good, and a great play here. Euro Swiss up quite a bit today, up about 14 pips, back up above 120.50. Now we could be building a base here around this 120.30. Was really hoping to drop down to the 120.10 again to acquire some more positions, but nonetheless this is still a very, very good scenario here where we're starting to consolidate. Of course, it all has a lot to do with what happens in Europe, and it more so between Europe and Switzerland. Will Switzerland valuation drop in comparison to the euro? So a lot going on there internally because these countries are so tied together, or these currencies are so tied together. Longer term, still looking for this to get up to around 124, 125. So we're definitely in a point in which to do that, fundamentally as well as technically. It just will probably take some time to get there. Euro yen up quite a bit today, up about 60 pips right now. It's backed off of its highs. We did get up above 107.50 and since backed off. Now very similar pattern here to the euro against the dollar. Rallied up, we've fallen back a little bit, and now we've rallied up, made new highs. Stochastics have not. So longer term, we've been looking for this market to sell off. It has broken out on a weekly basis above this trend line that goes back about 3 years. So that is a very positive sign. Now if we can make it one more week up here, that could signal a longer term turnaround. If we do not, if we fall right back next week and get back down to 104, then this move will be certainly over with very quickly. And longer term as well, it will certainly convince us that this market is headed back towards the upper 80s, lower 90s. So here we are. We're going to close the week and the month out right on this very long-term trend line around 107. And next week, when the new month starts, we'll have to see what happens. We could pop up above this during the month and then fall back before the close of the month. So very important how we close out the month of December here, and how we trade around in the interim as well. But for the month of December, we would need to close up to about 111 or so in order to really turn this market around. We're fighting a lot of negativity here. This huge amount of damage done here, as well as this extreme sell-off here for several years. Not very good. We really need a very strong rally up and out of here to form some sort of bottom pattern and some sort of a turnaround that's substantial. So longer term, some indecisiveness right now, but still looking for it to go down on a longer term basis. So that is it for this week. I went over my limit a little bit. I do apologize for that. Please stop by FX Addicts. If you are not a member, please stop on by. I am open to answer questions about currency trading or interest rates or anything like that, economics, at any time. So feel free to shoot me an email, catch me on Skype, or just visit our chat room at FX Addicts. Thank you.